my epiphany was I just didn't want to be a punching bag anymore, right? Like I just hate the idea of if you had $500 million and you put in a savings account yielding 0.01% interest waiting to die, right? You're just going to lose. Look, I think Bitcoin is by far the highest upside, lowest risk, clearest choice, most compelling trade of the decade by far. Everything else would be dilutive. It's like in the short term, you might see more upside, but the technical complications, the competitive risks, the legal risk, the regulatory risks, and the ethical risks of all those other crypto trades are so large as to not be worth the trouble. And I think that right now, if you look in the entire crypto industry, and if you parse the words of the chairman of the SEC and the secretary of the Treasury and the head of the Fed, the only safe harbor for an institutional investor, if you wanted to invest in digital property, is Bitcoin. Everything else has regulatory risk, has uncertainty, and it's highly likely most of them are investment contracts and security tokens. And it's not, by the way, it's not that you can't invest in a security, but the problem is if it is a security, there's all sorts of questions about can you trade it and when, and it's unethical for a politician or a public figure to endorse a security. Right? So there's all sorts of problems with them because they're not registered securities. And there's no clarity. So if you're, let me say it this way. There's 4 types of buckets of money. There's the saving. If you want to save money and give it to your grandchildren, then you just convert a weak asset to a strong asset. And that means you sell currency and you sell stocks and you buy digital property like Bitcoin, or you buy like land you're going to give to your grandchildren. You know, you're buying hard, tangible something to hold 100 years, right? If you're an investor, you invest in a company or technology you think is going to be a screaming win, and there's risk. It might have competitors. It might win. It might lose. The Ubers, the Airbnbs, the Apples, the Amazons, whatever. It's an investment. If you're a trader, you're trading risk derivatives and what direction is the yield curve going to go, and you're trading pairs. This will do that. And, you know, you're about speed and leverage. And if you know you're a good trader, you know how to trade something, you know it, right? If you don't know you're the best at doing that, then you probably shouldn't do that. But people do it. If you're just focused, you got to be focused. And then the last is speculation. And sometimes you want to speculate. It's fun. You go to a casino, you gamble some money, you gamble the money that you can't afford to lose. There's some things that are speculative. As a publicly traded company, I have legal, ethical, civil liabilities, right, to my shareholders. I need to disclose what I'm doing. I need to register it, right? I'm a fiduciary for them. So we have a very straightforward strategy. It's like we're going to buy and hold Bitcoin. If I were to trade it, right, I need to disclose that. If I'm going to hedge the risk, if I'm going to trade in and out of things, that's a different business. I need to disclose that. And so from our point of view, it's just not worth the risk and the headache to get into those businesses. But between you and me, I think Bitcoin's $1 trillion asset going to $200 trillion. If it's going to go up by a factor of 200, it's pure digital energy. It's pure digital property. That is underappreciated. There's $250 trillion worth of property, money. There's 100 trillion in credit, which is crumbling. There's 100 trillion plus in property as a store of value. There's 10 trillion in gold. There's 80 trillion in currency derivatives. If you look at all that stuff, which is defective and it's inflating or debasing, it seems to me like Bitcoin is just going to advance aggressively against that at a fairly fast rate until it chews up most of that market, and then it'll slow down and grow at the rate that the cyber economy grows. But so if you had that option, you want to make a lot of money, there's 2 ways to make a lot of money. One way is you take something you have huge conviction on and you leverage it. Like I'm levered long Bitcoin, right? I had 250 million in capital. I currently have 6.2 billion position. Okay. My bet is $6.2 billion. How did I get from 250 million to 6.2 billion? That's like laser-like focus, like all the Bitcoiners, we got laser eyes. The point of laser eyes is focus on how you can get more Bitcoin. Okay. There's another way. You can go and buy another coin that might go up by a factor of 100 without leverage. But, then you're trying to pick which of 100, or you could pick a stock. So now you're trading, Google was a good play over the last 12 months. It's up 80%. Amazon looks like it would have been good. It's been a disaster. Okay. So who would have guessed that Google was going to destroy Amazon 12 months ago? And And will they keep doing it quarter after quarter? So that's a different thing. It's not for us, right? I mean, I'm more interested in how do you borrow $1 billion for 0% interest? Let me say one more way. If Bitcoin's going up 135% a year, right? And if we look at the chart, I mean, Bitcoin is up 159% every year for a decade, and is up 400% this year. So you can fill in the number you want to fill in. If Bitcoin's going up more than 100% a year and you can borrow money at 6%, that's a positive arbitrage of 94%, right? So why can I actually borrow that money? Because I have credibility and I have the trust and I have not broken faith with my investors. They need to understand the risk. If I'm not predictable, right? If the company is not predictable, if you said to me, I want to borrow $1 million from you, Mike, and I'm going to buy a city block in Manhattan. Okay, I can make that. I get that. That's a good bet. If you said, I want to borrow $1 million, I might buy a block in Manhattan, but I might go to Vegas and gamble it while I'm drunk, but I'm not sure which I'll do. Or I might just like flip a coin for it with the dude with sunglasses on the side of the street. Like if you said that to me, I'm not giving you the money. And so I have a different set of constraints. I'm an institutional investor and I have fiduciary responsibilities to equity holders and debt holders, and our reputation matters, not just for business, but also for civil and other liabilities. So that's why we do what we do.